Okay, this is a chart of the S&P E-mini for Wednesday, May 23rd. And if you're wondering exactly how you would have played today, let's see where the exact setups were using the processtrading.com right edge trading system that gives you an edge. So we're going to see today that you would have profited mostly from taking contrarian trades. The day started out right over here, and we know within processtrading.com there's two types or two parts to the trading screen. On the upper half here, we see the trend trading part and the counter trend trading part. So this is all about the trend trading part. Then below it, we have the three discretionary indicators, which are about taking discretionary trades and validating the contrarian trades. As we watch price rise here, we see the contrarian bands or the contrabands. That's these white lines right here. Price went up through that. The way that you trade that exactly is you must, once price hits or goes through the contrarian band in either direction, you have to wait for a timing alert dot. That's this little blue dot right here. Now, for taking a contrarian trade, when you get that timing alert dot, you want to enter immediately. And you want to set your stop at a half, 1 or 2 points. And the whole idea here, again, is on the upper half where we're doing the trend and the counter trend trades or the contrarian trades. The system is all about getting you to buy into strength and sell into weakness. So it identifies a weakness as coming right at this point. That weakness is validated through the cinnamon oscillator right here, where the momentum cuts down rapidly through the upper bound of the oscillator and through the cinnamon line or the conviction. So we know that that's sloping down, as well as the energy. That's the internal energy. The demand is coming out and it shows weakness here. And down here on the short-term trend oscillator, the short-term trend line is cut through the upper bound and is angling down slightly here. But these are the two main aspects of it here, is we see that the cinnamon oscillator and the momentum is cutting down through the cinnamon line. So had we taken our trade by the trade management rules of entering immediately when we get that dot, we would have got in right here and we would have went down to this point here. And as we come down to here, that trade then is good for 11 points. The next trade that we would take in would be a discretionary trade. So if you're going to take a trend trade with processtrading.com, you're going to use the process trading VWAP, where if it's yellow, you can take a trade to the long side, and if it's gray, then you can take a trade to the downside following the trade management rules. So you didn't have any rules that fit that condition right here. So this right here would have been a discretionary trade. The only thing that would have got you into this trade specifically is that right here you did have a timing alert dot, and you also had a price bar trend dot that indicates often that a trend is going to begin. Then down on the energy bars, you had a gray bar within the red for energy, which is a sign that a change in direction of price is potential. And you also had the trend alert dot. Now, at this point, this trend alert dot, it's just another validation of this trend alert dot here, but we don't know what direction it's going to take. So we look down to our cinnamon oscillator, and we see that the momentum line now is cutting up through the cinnamon line right at this point. So if we took a discretionary trade, it would be on the strength of the timing alert dot, the trend alert dot, another trend alert dot, weakness coming in supply, and also momentum shifting to the upside. If we took that trade there, we probably would have got in somewhere around here, and we would have got out probably in this area here where weakness starts to show up in the internal energy and the momentum starts to fall off. So if we took this trade and we got in right around this area here, and then we took it up to this area here, that's good for about 3.5 points. Your next contrarian trade comes in right here. The price bar right here came within a tick. You could trade this as a contrarian trade, being that close to the band. You would have followed your rules of getting in immediately, and you would have taken that trade down to this point here where you saw a timing alert dot going the other way, and that's an exit point for you on that trade. So there's another contrarian trade. This is a contrarian trade. This is contrarian. So are these two. Now, all those 4 contrarian trades would have worked out for you. Here, you had a timing alert dot where the bars are above the contraband line, and you have a timing alert dot, but as we look down, we see a trend alert dot here, and we don't know to what degree or which way that trend alert dot is going. We see that it comes within weakness, within the internal energy, so that would suggest a downside. But over here, we see the sentiment or the conviction line is above the upper bound of the sentiment oscillator, and that shows very strong sentiment to taking price higher. As well, we see the short-term trend oscillator is angling up. Again, another strong sign that a trend is underfoot. So this is not one that has a preponderance of evidence. Matter of fact, if anything, it shows that we shouldn't take that trade. And so that one is why we would not get into that trade. Following along here, this would be another discretionary trade. The only reason you would get into this trade is by your classical understanding of trading and reading technical analysis. Here we had price breakthrough resistance, and it held at the support line here. Then it came down, and it basically held at the support line here. Here it came down, and this retraction here, it could not take the supply, could not take price down to even the previous low. And then it went back up over and through resistance. But then when it gets over here and meets resistance or support again, that's 1, 2, 3. You could include this as 4. You know, right around that support area, it's very difficult for price to go lower. So you would be looking here at the doji, okay, and then the positive bars to the upside. Then if you're going to look down to the oscillators, you look down here to the cinnamon oscillator and see momentum was coming up rapidly, that cinnamon had hit the median line in the oscillator and began to slope up. But mainly what you're looking at is that momentum had crossed through the cinnamon line. Remember, that's key to so many trades. And so you would be able to get in there as a discretionary trade. Now, if you're going to get in as a discretionary trade, you might want to tighten your stops a little bit and keep them maybe within 2.5 points. So the next trade, we already discussed that you wouldn't take this, would be the counter trend trade, because you're getting a timing alert dot with the price bars above. The same thing here. Your price is above the contraband line, and you're getting a timing alert dot, so you could take that to downside with the specific trade management rules. The only trend trade that you had for today is, again, one that worked out via the system. So you had a yellow process trading VWAP, which means you can trade any timing alert dot that is beneath the price bars, and you can trade it to the upside. So that's right here. The way you take that trade is you look at the high of the bar associated with the timing alert dot and place your trade 2 points above that. That would have got you in right in this area here. And from this area here up to this area here is another 4 points. So all in all, if you're looking for the high probability trades today, you had 1, 2, 3, 4, 5, 6, and this was a discretionary trade. So you had at least 6 good trades to choose from today, depending on how you wanted to play it. And the majority of those trades were counter trend trades. That's the nice thing about the system of ProcessTrading.com using the Right Edge system, that so many people want to take contrarian trades because they just say, well, price is getting too high, but they don't know exactly where to enter those trades or what trade management to use. So this tells you where those likely counter trend trades should be taken, why they should be taken, and where they should be exited. Then you also have your regular trend trades and your discretionary trades. So that's the setups for today on the 23rd, and we'll have another one tomorrow on the 24th. And if you want to see more about the system, you can go over to ProcessTrading.com. And it's all explained over there in the blogs and the videos. And so I hope your trading went well today and as well tomorrow. And we'll look at the setups again in tomorrow's video.